everybody. I want to thank you for coming back to Sobel Insights. We are today, this is a weekly series that we're presenting on various topics that we think are of interest to people. This is a 15-minute session on the Q&A. Today's topic is going to be on deductions on the personal deductions on the tax return. As I said, the session is 15 minutes. We do not offer CPE yet. As nano credits in the future we might start offering, but right now we're just trying to provide as much insight as possible. The topic today was as a result of one of the attendees requesting this topic. So if you have an idea for a topic or potential speakers, feel free to email me. You'll see my email at the end of the presentation. And with that, let's kick this off. Today's presenter is Michael Cornell. He is a senior in our tax department who works a lot with individual returns and trust returns. So, Michael, as I said, we're going to be focusing on itemized deductions, and I know that form, Schedule A.
Yeah.
First item is medical expenses.
Yes.
What can I deduct? What are medical expenses?
All right. So by the IRS, in order to deduct medical expenses, they have to primarily alleviate or prevent physical or mental illness. So you have to go to a doctor, surgeon, dentist, or other medical practitioners. This expense also includes cost of equipment, supplies, and transportation. So let's say you have to go to a specialist in New York City, tolls for the bridge, and they allow up to 17 cents per mile. So just want to be able to keep track of all that if you have to travel anywhere to see a specialist.
Oh, so that's good. So I didn't even think about the tolls. I knew mileage, but you have tolls, you have parking in New York City.
Yep.
If I had to go to Pennsylvania, Minnesota, I forgot the clinic that's out there. If we go there, my wife went with me to accompany me. Is the hotel that she stays in potentially a deduction?
So for half of it for yourself, right?
Okay.
Or if you're going to get a room for yourself and she stays with you, then yes. But if you're getting an airplane ticket and you buy 2 tickets, and only 1 ticket would be deductible.
Okay.
Like
great.
You wouldn't be able to deduct her expense unless she's going through medical issues as well.
Okay, and I hope that she's not taking this as a trip. If we're going to medical, yay, I get to go away too. Okay, so that's medical. Now I know medical has a limitation though. It's not all the dollars are deductible.
Yeah, so you're allowed to deduct 7.5% of your adjusted gross income. So let's say you have a $40,000 adjusted gross income. That's a nice round number. 7.5% of that is $3,000. So any medical expenses above $3,000 would be allowable. So you have $10,000 total. You would put $10,000 in the return. The return would figure it out, and $7,000 would show up on Schedule A.
Great. Now, I'm not going to go into any further details with it, but New Jersey has a different threshold, is my recollection, right?
Okay.
May not get benefit for federal, but don't ignore New Jersey. So it's medical. I know if I go down the form, then we go to the infamous state and local, or which you guys like to refer to as SALT.
Yes. So SALT's been around for a long time, but it's gotten a lot of attention lately with the TCJA because it's limiting you to $10,000. Otherwise, before that, you would be able to deduct all your real estate taxes, and it stands for state and local tax.
Right.
But anyone in New Jersey or Bergen County area where I'm from, a little higher than $10,000 in the real estate taxes. So you get limited.
Just your real estate taxes, and then you try and add your income tax to it, and you've already
and
the 10,000.
And your estimated tax payments, all those are
right.
included in that. There's a whole list.
Right.
If you want me
so
to go through.
I'm going to ignore casualty loss because that's a fun area, but and kind of jump down to charitable contributions.
Yeah.
And
so there's cash and then there's non-cash. So cash basically is what it is. If you want to donate cash to a charitable organization, you can. Non-cash includes property, clothes, antiques, books, and stuff like that. And there's a difference in how much you can deduct. For cash, last year was 60% of your adjusted gross income. This year in 2020, they're actually allowing you to deduct 100% of your adjusted gross income. And in order to take these contributions, you have to itemize your you have to itemize your deductions. You can't take a standard deduction in previous years and take all your cash contributions. However, in 2020, they are allowing the $300 cash contribution deduction for standard deductions, which is nice, especially if you give to your local church, or in 2020, there's a lot of organizations that needed contributions, especially food banks and stuff like that, with people suffering from the pandemic. So you want to be able to take that even if you can't itemize your deductions. It's a nice little benefit.
Yeah, I joked about it, but I sit on a small board in my town, and I said to them, people lost the itemized deductions with the increase in the standard deduction, so people were not as charitable. But I said to them, this year is at $300. Reach out to everybody in the community and say, you have this window, give us the $300.
Yeah.
Try.
Yeah.
It's
And
definitely
if you
helpful.
took advantage of that, then you'll be able to get the credit for it on your tax return.
Right. So now that's cash. What about non-cash? I mean, I've got a bunch of old suits and books that I'm sure are worth millions of dollars.
So they might be worth millions of dollars to you, but unfortunately, when you give them away, they're not as valuable as you purchase them. So if anything over $500, the IRS requests a description of what these non-cash contributions are. If they're worth $10,000 to you, they're technically not worth $10,000 to the organization that you donated them to. Anything over $5,000 needs an appraisal. So if you think it's worth over $5,000 and you're giving to the organization, they think so too, then you're going to need an appraisal report for that donation.
I think except if it's publicly traded stock, then
that's public knowledge, and you'll be able to, and that's fair market value, but then your basis, but we're not going to get into all that. That's the book of worms.
Right. Okay. So you have the moving on down, and it kind of, when the tax law changed, it used to continue down to miscellaneous itemized deductions, and you get fee in there and the safe deposit box. But the other that people used to get a lot of benefit from was non-reimbursed employee expenses. What's going on with that?
They completely eliminated that. You cannot deduct any unreimbursed employee expenses. However, you can request or negotiate with your employer to be reimbursed. Not saying they're going to, but you have that option to discuss that topic with your employer. But unfortunately, for the IRS, you're not able to deduct those anymore.
So then it gets down to, is it a taxable event if you're reimbursed? Now, I'm not going to get into that with you, but because we're talking deductions, not income.
I don't believe they are. If you're paying for it and you're getting reimbursed, I don't believe they are.
I know it's called, if it's an accountable plan, that's for driving. If it's an accountable plan, if you're itemizing your expenses and they're reimbursing you for that, if they're just giving you a blanket allowance, that could probably be taxable.
Correct.
Gotcha. Okay. Hopefully that clarifies things for people, because I know that people just want to, get, X thousands of dollars. I know that the IRS this year came out with, as part of the CARES Act, that an employer can give a certain amount if it's provided the employee signs off that they used it for office type of expenses. Speaking of which, not that in particular, because again, this is not an income session, this is a deduction session. So speaking of signing off in home office, since you can't do unreimbursed employee expenses, what's with the home office? We have a lot of people working from home now. I even myself, it probably cost me around $1,000 to set up the monitors and computers and everything. What can employees do?
So unfortunately, again, employees cannot deduct these expenses. You can request reimbursement, but you cannot deduct these expenses. There's a Schedule C, and the only way you can file a Schedule C is if you form a business or operate a business as a profession or practice as a sole proprietor. So if you have a side job after your work hours and you use some of the equipment, then maybe you can talk about the purchasing of the equipment. But as an employee, I know I purchased a monitor, I purchased a desk chair. Unfortunately, I cannot deduct those expenses as well. I'm not in the $1,000 range, but yeah.
And if you plan on doing home office, not as an employee, but as as part of your business, as a sole proprietor, or as part of your Schedule C, those expenses, that home office is supposed to be the area dedicated to business. So you're not supposed to be doing personal business there also,
Correct.
right?
Correct. And
Yeah.
then you would measure it out and take a reasonable square footage of that, and then square footage of your house, and then allocate the expenses accordingly to your utilities, real estate taxes, stuff like that.
I had a client email me around 2 weeks ago and say, we'd like to do the home office deduction for the Schedule C. And I said, I'm not gonna lie, most of the time, there's not a lot of benefit for it. Especially if you depreciate the house, now you lose that portion for the exemption when you sell the house.
Mhm.
I said, but how much space do you think? And they said 300 square feet.
300 square feet for home office. That's nice.
I said, I'm going to be honest, I can't imagine how you could come up with 300 square feet. Cannot imagine. And I said, that's 20 by 15. That's a big area. So people have to be realistic if they're going to do this home office deduction. So they wound up going and adding the desk, looking the desk that was only done for business according to them. And then where they had file cabinets, they had 3 areas where there were file cabinets. It was an attorney of documents kept in their house.
Yeah.
Okay. Winds up in total, after adding up the file cabinets, it was 186 square feet.
Oh, wow. That's a little more than half, but that was more than I would have thought.
Yeah.
180 square, it's a 10 by 18 area.
Yeah. So without the file cabinets, so you're probably talking 25 square feet.
If that, your desk, your chair,
Right.
mobility. Yeah.
Right. 30 square feet, 6 by 5 or whatever, 36. So that's why people think that there's going to be this windfall. If you really add up the space that's dedicated to business, it's not
Correct.
significant. But
Correct.
if you think it is, by all means, go through the process. And I believe that the IRS does have a simplified method out there now for the home office deduction. And again, if you think that you have enough expenses, then don't pass it up either.
Yeah,
Right.
I agree.
So, all right. I think those are my, I don't know if you have anything else that you want to say.
All right, so I said, if you have any concerns or issues, always consult your tax advisor. We're here to help in these difficult times. So any issues, just always reach out.
I appreciate that. I thought your advice was going to be is keep a Excel schedule. Don't give us the receipts.
Well, obviously that's better, but obviously organization helps better for us at the end of the day.
Great. Michael, I want to thank you for joining us today. And if anybody has any questions, or feel free to reach out to us. As Michael said, we're here to help out. Thank you very much for joining us. We will have more future sessions coming up. And if you have any other further ideas, feel free to reach out to us. Thank you again.
Thanks, Brad.